Hey, it's Wayne Wagner from Visionary Wealth Management, and with the stock market down 25 to 35%, depending on the index that you're looking at, I thought it might be time to reach out and hold some hands. Now, as a group, I want to tell you how so incredibly proud I am of you. I talk to financial advisors every week who are asking and talking about, what are you doing about all the clients that are calling in a panic? I'm telling you, we have not had a single client call in a panic. We've had a couple emails. Hey, is everything okay? I've had a half a dozen emails asking how I'm doing and is this stressing me out? And I'll tell you why I'm smiling in a few minutes. But here's the bottom line. We have planned within a diversification of your portfolio for times and seasons just like this. We're not in a crisis with the stock market. The reality is this is normalized volatility. It just feels worse because we're in a 24-hour news cycle. Now, here's the good news. I'm going to throw a couple of data points at you. The average recession lasts for 11 months. During a recession, the stock market bottoms about 4 months before the end of the recession. If we are in a recession, the second quarter this year would be the second quarter of the recession. So the recession started around January of 2022. If we're in a recession, we can't properly define it yet because technically it's 2 negative quarters of GDP. But if we're in a recession, the average recession lasts about 11 months, and we would be about halfway or more through that recession right now, and frankly, almost to the point where the stock market should bottom. Now, I'm not calling a bottom. I'm not saying this is an average recession. Who knows? It might be a longer one. Who knows? The stock market might go down more. Here's what I want you to hear. Your portfolio is diversified, and in 2022, diversification is back. It works. When we put cash in the portfolio, when we put floating rate bonds in the portfolio, fixed index annuities, and other forms of defensive measures within a portfolio, when the stock market's screaming through the roof, those assets suck to own because they're holding us back and it doesn't feel awesome. But during a period of time where the stock market drops 25 to 35%, boy, those things feel awesome again. And so diversification is back in a big way in 2022, and your portfolio is diversified. So I'll finish with this thought. The reason I'm smiling is that if those statistics are, if this is about an average recession, and if this is about average for the stock market pullback, then we should be muddling through this, and our portfolios have fared really, really well compared to the broader stock market index. We're really pleased with how the portfolios have held up. And we've had a couple of other things happen within our portfolios. That some of it was planned, some of it was unplanned. Some of you have some positions that are kind of getting bought out by investment banks right now. And that's kind of been a little bit of a wind to our back. But at a high level, diversification is working. Your portfolios have been much more resilient than the stock market at this point. And if you're pulling money out of your portfolio on a regular basis, we've already planned a few years worth of that cash flow into our modeling for you. And so the cash flow that we have allocated plus the additional dividends and income within your portfolio should have you in a position to last 3 to 5 years without selling any stocks at this stage. And so the reason I really am smiling is that when the stock market has been up and more up, we're always looking at forward returns. Well, how is the stock market going to continue to go up from here? And that's much harder to justify and rationalize when the stock market has been up as much as it has been. But when the stock market pulls back 25 to 35%, it means our future annualized returns have a much higher likelihood of being really nice. And so while we're not calling a bottom here, we're also not calling this a crisis and jumping out and running to cash or gold or something else that we think is going to hold value. By the way, Bitcoin's not doing a great job holding value right now, if you've checked that lately. And I know that's a touchy subject for one or two of our clients, so I apologize for poking that nerve. But the reality is, the folks who thought that cryptocurrency was going to be an inflation hedge and a protection against the stock market fallbacks, because it's down a lot. So as always, if you are concerned, if you're hiding under your desk or your bed and too scared to call us, please, by all means, pick up the phone. We're always here with perspective for the decisions ahead, and we're always here to hold hands during trying times. Have a great day. Again, this is Wayne at Visionary Wealth Management. Have a wonderful week.